The following is a presentation of TFNN. The Global Market Pulse. With your host, John Logan. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, John Logan.
Hi, guys. Welcome back to the show. It is Tuesday morning in the USA and Tuesday night here in Asia. Got some volatility in these markets. And as a trader, you got to, at some point, in your trading career, you've got to start embracing that. If you're an investor, maybe not what you want to see, but as a trader, this is the type of, areas in time where you hopefully can make your whole year sometimes in some of these trades that are going on right now, because we've had a change in tone. I don't have to tell you that, but I'm sure you've been watching. But some of these currencies, I'm looking at the British pound right now. This is the 240-minute view. Some of these currencies, and we've got some new news out on this today. This pound is probably going to go sub 150 at some point. Still trading in the 159s right now, broke that 160 level, and really sitting. Let me get this compressed here a little bit. Eclipse recent lows, and no new information down here on the British pound. But what I'm trying to say in general is you've got some big moves in a lot of different instruments right now. And we've been focusing lately not on really specific stocks in general. And we're going to use our scanner today to kind of drill down into some household futures names and some currency names and a couple of ETFs, because those are the, stocks. It's a little harder to, in my opinion, to pick stocks in this type of environment. And when you're presented some of these key levels that are either breaking or showing support on the indexes or on the indices, futures, index futures, or the currencies, or the, some of the hot commodities, I think you just got to kind of go with that. That's always been my opinion. And the way to trade stocks in this environment, if you're going to trade them, is to try to, in strong markets, try to find weak stocks, and weak markets, big pullbacks like this. When you think we might have come back to certain levels on the index itself, try to find strong stocks to buy in this instance. And we've tried to show a couple of those recently on the show the past couple of days. And that kind of tempers the risk a little bit, in my opinion. So, and people call that relative strength trading. It has nothing to do with RSI or the relative strength indicator, whatever you want to call it. It's, relativity of the underlying instruments of the index itself relative to the index, just to clear that up. So here's the British pound. We had this 240 unfair low. That's what we were keying off of. We talked about that number. And if we drill down into the daily, 161.39 was that kind of retest a couple of days in a row, and that coupled with, with the number 161.28, so it was about a 11 pip, as they call it in currency world, spread between the unfair lows on the daily and the unfair lows on the 240, and that's the kind of setups that you really, really want to see. Especially when you got volatility. You want to try to use multiple time frames and try to, line those up if you can. And this scanner tool actually does that for you a lot of times. You can come in here, and I'm just looking right now at the futures, the currencies, and the ETFs here that we follow. And I'm going to come in here, and I'm going to say, okay, let's just look at daily bottom. There's nothing there. let's look at daily top here, and I'll try to show you what I'm talking about. We got one candidate. It's amazing. It's almost statistically impossible almost, but I guess that's the way it is. Let's look at another time frame here. Let's take a look at our 240. Let's take a look at top. Let's take a look at bottom. All right, so as we look at these, we found a bottom. We got lean hogs, and we're also showing a weekly inflection point in the same vicinity. So the bottom here, and I don't really like to trade 240s against weeklies. My favorite trade is 240s, dailies and weeklies. Dailies and weeklies are extremely strong signals when they line up. But as we look at the 240 bottom here, we're in the 94.33 area on lean hogs, and on the top here 94.88. So again, that's about a 50-cent spread, and that's what I like to call DMZs, if you will, these demilitarized zones where we need to kind of get away from that zone one way or the other. But this thing, we're not looking at the world of stocks here, so we're only looking at maybe 50, 60 instruments total. So let's take a look at this. Let's just take a look at the S&P 500. I should have killed that first, but we're going to wait for this to come up, and we're going to try the same thing again, and we're going to take a look at daily bottoms. So again, these are the stocks that are sitting on the bottom, and lo and behold, NEE, we've got another bottom here on our weekly. So as we look at the bottom there, 92.86, the weekly 93.17, got a DMZ there about, what is that, 35 cents or so. So as I go into NEE, I'm going to pull up NEE. And the theme of this is, if you're trying to find stocks that are lining up in multiple time frames on inflection points, here's the weekly view on NextEra Energy sitting right there, new box here. And on the daily, here's the situation. It looks like we've eclipsed both of those. So again, we had a close below both of those. That's pretty damning here. But, this morning, I think the opening print, I'm assuming, looks like it's real. Nope. Market hadn't opened yet, but this is something to pay attention to. Looking relatively weak on the weeklies and dailies finally, but kind of had been not one of the weaker stocks. A lot of the stocks have obviously in this 150 point sell off top to bottom from the all-time highs to what we've seen recently on the bottom. A lot of stocks are well below weeklies and dailies, so I'm looking at this trying to find opportunities. And if the market shows some strength, I'm actually right at the bottom of a fair auction on the weekly and daily, and I'm looking at this maybe as, looking at some other things that we look at. But I'm looking at this, if we cross back above this DMZ and the market happens to catch a bid in general, this thing may actually be a decent long. So there's a lot of different ways to look at this. Sorry to get off kilter there, but I just wanted to bring those fine points out about, how do we choose instruments to trade in these times. And if you're going to do relative strength trading, I like to see maximum leverage and high probabilities with these time frames lining up. We looked at the British pound. It's continuing to go down. Let's take a look at the euro. A little bit of a sympathy trade here. And I want to review that all-important number here, 127.36. Had some action we talked about yesterday, getting above, then getting back down below, meeting some targets down below. We've obviously kind of gotten back in the fair auction. We actually talked about this rattling around a little bit here and maybe gaining some, spring-loaded action, if you will, to even head lower. So, again, building cars, Tom O'Brien loves to say that, and I agree with him. It builds some spring-loaded possible momentum to continue the same way. It's the breakout on the bottom, 126.04. Let's just call it 126. I'm still a big fan of shorting the euro. I think we're going to be sub 120 in the next month. Okay. Japanese yen. Let's take a look at this because I got some comments on this, and I know a lot of you guys are trading the yen. We talked about waiting patiently, maybe until the bottom of our fair auction here around 107.07, 107.06. Excuse me. Excuse me. Sorry about that. And as we look at this, we've met some targets down below, and we're trading down below. We're kind of gravitating around there. I'm going to have to wait until we get a close again now above the unfair lows, 107.07. Kind of, not a big fan of just trading the action above or below. I want to see it close above, and I'd love to see it close above 107.60.61. Remember, we talked about this really thin profile here on a relative scale. It's been enforced for a long time. So this is going to be a very serious bracketed area, if you will, for the Japanese yen. And I'm willing to kind of start getting my toe in the water anytime we get a close in this fair auction. Hopefully we'll start moving back above, and maybe I can add to the position above 107.61 on this. I hadn't had a lot of conflicting information here on the yen, so I'm still a big fan with no divergences of trading this from the long side, not the short side. All right, so as we drill down into a couple of other things, I want to take a look at the ruble again. Eddie Edmundus, my partner, who's normally in Spain, is actually in Moscow right now, seeing a big firm there. I'd call him the Merrill Lynch of Russia. And, this thing's obviously gotten out of control. We talked about it yesterday. There's really no end in sight. And with oil not being a favorable situation, they've got a lot of debt coming due with a lot of Russian companies. And this is, again, not a situation, in my opinion, to be shorting. And there's nothing up here to pay attention to when it comes to the ruble right now. Taking a look at the dollar really quick before we go to our first break. Talked about this situation here. Talked about leveraging off of 85, 39, 40 down here. We got down below. This is very similar to the yen right now. Got back into the fair auction, got the close, and I'm going to blow this up a little bit. Got the close above, got the retest of that inflection point. Then we're off to the races and meeting some targets above on the dollar. Dollar showing strength again around the 85.40 area, so to speak. This is the type of action you actually like to see for a continuation pattern long again. But the good news is, again, you can put stops oriented based around your unfair lows down here outside of that meaty part of the bell curve, as we talk about, based on your appetite for risk down here. And I don't see a lot of conflicting information on the dollar here. So, I think this is a very good classical technical analysis type gathering motion to possibly, make another attempt up north. Now, we also have, as of right now, we've got a weekly orange bar trying to appear. So by the end of the week, if this stays orange, we may get a new profile appear on the weekly. Then we'll have some even more powerful inflection points that will appear on a long-term basis. So that's the situation on the dollar. We're going to go to break. We're going to come back, continue drilling down into some of the usual suspects of the futures world. And at some point later in the show, we will take a look at some relative strength stock trades. We'll be right back, folks.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Thinkorswim, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
Andy Hecht's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. John takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi guys, welcome back. Got a little request here. Take a look at the 10-year Treasury. Got the scanner up, and I love to look at this thing pre-market. I look at it all day long. It was created so hopefully, our traders and myself wouldn't miss a trade, wouldn't miss a good opportunity. You can set some little filters and alerts if you want to in this thing, but I want to scroll down to the 10-year just to give you an idea of what's going on here. We see green 60, green 240, green daily, and green weekly, and at the very bare minimum, just seeing that alone means that I can't go short this thing. That's the good news. It eliminates, for me, one side of the marketplace until I start seeing some kind of mitigation of these colors somewhere. So as I pull up a multi-time frame, level chart here, I love to look at this. I mean, this is the level of the market. If I don't want to see the POCs or whatever, if I don't want to see the bottoms here, basically gives me a nice little landscape of what's going on. We're going to put some historicals in that little snap chart. Actually, we were going to do it the other day, but we had a couple of things ahead of it. So as we look at this, the 30-year, very similar situation, and the German Bund, this is the section of rate products down here, if you will. We look at the Bund, the 30-year, and the 10-year. And lo and behold, it's our biggest patch of green, if you will. So, so that being said, let's move right into the charts. And let's look at the 10-year on the daily. Not a lot has changed on this thing, and I'm not patting ourselves on the back or anything, but we've talked about at least not going short this product. There's too many things against you on this. And is it a bubble? Without question, in my opinion. I mean, we've got, our growth rate, which is normally supposed to match the 10-year rate. And, that being said, we should at bare minimum be above 3.5%. This thing's at, it's well below there, put it that way. But, so these disconnects at some point kind of come to roost. But right now, as traders, I've tried to make sense of things and fight, things that I consider to be stupid logic over the years. And that's always been the most painful trade and has cost the most money. And it leaves you, mentally distraught because, this doesn't really make a lot of sense to me. And this is probably going to end terribly. But as traders, you have eliminated hopefully one side of the marketplace just by looking at what we're looking at here. And until new information appears and until we start having some form of technical damage, I apologize, a little bit of delayed action there. Some form of technical damage on the 10-year. Just to point out some numbers, and we don't have any new daily profiles appearing anytime soon here. No new colors. We may get a turnaround at any point, but then we'll start seeing some possible orange bars here, and then we'll see a new profile appearing after that. Now, again, we always talk about letting somebody else get in there and swing the sword, and try to figure out where the tops or the bottoms are. We want to get some confirmation to either, buy support, which is what I'm more of a fan of on the treasuries at this stage, even though this is kind of an insane situation. Not trying to make fundamental sense of everything. And the weeklies, you've got this 126 general neighborhood down here. That's about a handle and a half away from where we're at now. So, again, it's just kind of I don't want to buy it up here until we have a pullback into some inflection points. And the inflection points recently that we were able to key off of here are, we had one at around 126, 21, 22. Another one here. Kind of missed the boat on this one. Didn't even get near it. So, again, it's okay to sit on the sidelines sometimes. I'm not a big fan of buying it or selling it right now because it's pretty far up there. And, the easy trade really has been just to keep this in mind. As markets go up, treasuries have gone sideways, generally speaking. Markets tick down, treasuries explode again. I mean, there's really not a lot of reasons to short this on many, many levels here. We're going to go to break. We're going to take a look at the 30-year really quick. Take a look at the German Bund to complete this section of our show. And then we're going to get into a couple other things after that. Be right back.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock in option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 8 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, guys. Welcome back to the show. Let's get right into a couple of things we left hanging here. Excuse me. Let's take a look at the S&Ps there. Let's take a look at the 30-year. We covered the 10-year, I think. Probably rambled about that more than we should have. It's a flat-out long and no shorts, in my opinion. Here's the 30-year. Same situation, even stronger situation than the 10-year. Obviously, it has a little bit more volatility to it than the 10-year. Let's take a look at, we talked about a couple of these inflection points here. We found one again on the 30-year. Looks like within the last 24 hours, actually. And no new information up here, so I can't buy it or definitely can't sell it up there. The German Bund. Don't look at this too often, but this is something, as we wait for this to populate. Here's the weekly on this. Got one profile based on, rolling over to the December contract. Unfair highs, 149.91. Almost did a retest of it this past week already and are up on the launching pad again. See if we can get this to change here. Well, looks like my charts are frozen. Okay, here we go. And the 240 situation, the daily situation on the German Bund, again, 149.93. And as you see this kind of congregate above these things and kind of, build, consolidate, if you will, around these inflection points, retest them. These are your battle points, in my opinion, in a very strong boomed market. There's a lot of problems. People are just making transitional type moves based on European instruments. And again, the way to fix problems is to let your treasuries go to zero interest rates. So I don't want to stand in the way of that concept as much as I think that may be an issue at some point. Here's the situation with gold. Then we're going to get into the index trades in just a little bit. Talked about pretty religiously this 1227 area. And I want to go to the, I want to go to the scanner really quick. I want to look at gold. Here's gold. New box attempting to appear on the weekly. That's what that orange cell means. But I want to mouse over my daily and see that 1227.19, let's just call it 1227, top of the box there, and 1227.80, let's just call it 1227.28 on the 240. So we had, dual time frame confluence here around 1227. And as we take a look at gold, we had that close above, and we never really went back and retested it on a daily. We were looking for that. But again, profile's a little bit lower. As we came out of the last box here, 1227, that was retested pretty much immediately intraday. So as you can see, 1227 got that little pop up into 1232 immediately, then came back to 1227 area, low 1227.5. I think we were right between 1227.80 and 1227.15 or whatever that was. That little DMZ between the 240 and the daily, and then it was off to the races again. So maybe I listen to the news. I try to ignore most of the things I hear on TV because I don't want my judgment skewed too much. I listen to it more for entertainment than anything else. The CNBCs of the world or things like that, and they're talking about everybody's talking about the 200-day moving average, and hey, that's great pullback opportunity in the indices. And it may provide, again, things don't go straight down. It may provide a little bit of a bounce. Historically speaking, I guess you could kind of hang your hat on some of that, but gold, I feel at this stage, and we talked about gold trying to start buying this above 1210 and 1212, if you remember that. And I said, look, I'm not looking at this from the short side breaking down. I'm looking at it for trying to get back above here and start trading this from the long side again. And now we kind of cleaned and cleared our daily profiles. Finally, we had a close above. We've acted well overnight. And let me just look at this. Let's just pull up the 60-minute gold. It's a continuous pattern. I mean, that daily chart's got a little bit of a misnomer there on the daily opens and close. But again, that this to me tells me that it's okay to be long, not okay to be short, basically, in a nutshell. So with the fear factor possibly coming in if that 200-day moving average doesn't hold, and I'm sure since everybody's talking about it, it probably won't. As a bounce point, gold may go higher. And you've got some technical areas, I think, in my opinion, that you can place some stops oriented around, namely the 1227 area, if that makes sense. Silver, just been talking about this, not really impressing me whatsoever. And, if things were going to pop in silver, it seems like they would have already happened, and we're just staying within that fair auction, and that cap around 1772, 1773 is held a couple of times in the last week or so. Once, twice, thrice. Is that a word? And, we're just kind of sitting here in, the so-called balanced area. So I think silver's pretty much a no trade right now. I wouldn't go short it or go long. I'd wait for a bust out on one side of that band, if you will. All right, let's get into something I guess everybody wants to talk about here. And let's take a look at the S&Ps and the NASDAQ. as we look at these, we've kind of taken the attitude with the market breadth being what it is and not changing. Excuse me. Let me pull up our scanner here. Market breadth being overly negative crossovers. And again, I don't look at these as overextended sometimes. I just look at, the crossovers will tell me when the breadth is changing relative to our information in the profiles. And we've obviously had a decent little pop this morning, but the breadth is still very negative. We talked yesterday about this 1901 area being the area to kind of, we had a 20-point gap up or whatever it was yesterday morning. And we talked about, pre-market. I don't have a chance to do any comments during the day, I guess. But pre-market, we talked about, where do you pick your battles? And we talked about if we rally above here, obviously you got to, say uncle at some point. Okay, I'm going to talk about silver again in a second. I just read your comment on the DEN. But, as we come back down below these areas, it's okay to be short again, in my opinion. But, there's no reason to hang on to things, and you can always get back into trades. Okay, I'm going to get back into silver in a second, and I'm reading your comments on the DEN there. The situation on silver, let's just finish up with the S&Ps first. So right now you got some new inflection points, 1880. You're having a decent little gap up this morning pre-market. So 1880 is something that's been hit and backed off already. And, until I'm told differently, I'm going to stay with the downtrend on these indices, being that the market breadth is still something I'm leaning on in general. Going back to silver, just to maybe I misspoke a little bit here. I just want to kind of get what my MO is on silver out of the way. Silver has not told me that it's okay to be long yet. And until I'm closing above 1772, 73, I may have missed, by taking this attitude, some of the move up from the very lows. But again, I want to have conviction if silver's going to pop up here. And then, therefore, I would be able to use this as a fence to lean against to try to trade this from the long side. But right now, we're kind of in mishmash area down here. And, the scanner will tell me when those things start happening. And right now, I just still feel like it's a no trade. So, I don't mean to, rain on anybody's long parade on silver. I just personally would like to have some conviction and some confirmation in that direction if it's going to happen. And on a relative scale, I'm looking at it versus gold a little bit here, and it's just not showing any type of relative strength. And I think gold is the better long at this stage, and that's just my opinion. So, yeah, keep the comments coming. I love it. And, I just want to make it clear to everyone that, I'm not a bottom picker or a top picker. I like to kind of wait until we, let somebody else figure that part out. I like to wait until we get a little confirmation. Okay, so I will stop beating a dead horse there. But keep the comments coming. I love it. Because there's a lot of different ways to look at these markets, and I'm not the Wizard of Oz here. Let's take a look at the NASDAQ. And, again, I'm relatively bearish on the market in general still. And if the market rallies and we get stopped out of some of these trades, the market being some of these indices, dims the brakes. But I'm a little bit more comfortable still going short here than going long. And therefore, taking a look at some of the golds of the world, I feel like that could, that fear factor may be able to kind of just still possibly make that thing move a little bit higher. Gold being kind of the thing in play as far as metals are considering right now. Here's the NASDAQ. Nothing new down here on the daily. This was kind of the the area of concern, that 2027 area, 2027. We talked about a lot. Kind of poked its head up there a couple of times, and I got stopped out of that trade actually. But then we're able to get back into it below. So I trade a lot more on levels, and I listen to all the hosts on TFNN, and they've got insane good information. But you know, I'm just giving you levels that are inflection points that I feel are very, very appropriate based on looking at our version of the original market profile and where these balanced areas are and where markets kind of become imbalanced outside of those bands. Taking a look at the 240 on the NASDAQ, as you can see, we talked yesterday pre-market about this. Hopefully we would get, you know, I think we were down here pre-market. I want to say somewhere down here, maybe, you know, I think this bar right here maybe. But we talked about, you know, let's hope we can get back up into an inflection point, 3881. And this kind of, you know, proves a little bit, you know, why I like these inflection points, because it gives me a pretty concrete area to be wrong and possibly be right, and maybe let the market come to you. Sometimes the market doesn't come to you, and, you know, the trade doesn't develop yet or at all because you're not in the trade at all. But, you know, this is something that I was really, really keen on it, hopefully approaching. And it approached it, placed the stops based on my appetite for risk, and you know, then we had a decent move down. And again, that was based on the market breadth, in my opinion, still being relatively negative. So what do you do now? All right, so this morning, I don't like the concept of this going back into this, because that to me would actually be somewhat market turning, if you will. So I'd like to see some new information on the NASDAQ. I'm not a big fan of going long here. Here's the very, very short term 60-minute. But, you know, I can't – it's hard to talk about the small time frames on a show that, you know, we're looking for guidance for the day. So I personally usually opt out on these very short profiles here. So, again, the NASDAQ, I think the S&Ps, you've got a little bit of leverage where it's at right now. And I think the NASDAQ probably – you know, just kind of churning around down here, and I don't really see a lot of information. We may get some new information appear, excuse me, during the day on the NASDAQ, and then that'll be great. But you know, you guys email me. I'm usually up 20 hours a day, seemingly, and maybe I can relay some information back to you. Here's the situation on the DAX. We usually talk about this. Nothing down here either on the daily. This is just you know, nothing to key off of here on the intermediate, and therefore that short trade still in force on that time frame. Here's the situation on the 240. The numbers to be aware of are 88.15 and then 89.61. I would love for it to rally back into 89.61. I think that's going to, you know, probably be the top of the market for that if we rally that far, and that would be what, about 140 DAX points, even, let's see, where are we at this morning? The low, 87.15. So you're looking at about 240, 50 DAX points from the bottom today. I don't know if that's going to happen, but that will be the ultimate selling area for the DAX. All right, we're going to go to break again, and we're going to be back for 5 minutes, and we're going to try to cram some more trades for today into last segment. We'll be right back, folks.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com. or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Catch Steve Rhodes as he teaches techniques on technical analysis using pattern recognition, celestial charting, Fibonacci, and other tools. The Trader's Edge, next on TFNN.
Hi, guys. Welcome back to the show. Got about 4 minutes left here. You know, something, somebody sent me an email. Wanted me to look at the IBB shares, the biotechnology ETF here. Weekly situation. Excuse me, this is the daily, nothing to key off of here. They were talking about maybe wanting to step in and buy this. Well, this is where the inflection point, in my opinion, 250.49. Very clearly sitting down there, bottom of the box on the weekly. That would be the next place I'd want to pick a battle here, considering we got nothing on the daily to key off of. Next couple of minutes, you know, in times like these, and I'm going to pull up the S&Ps again, you know, with this kind of volatility, you want to try to treat this, you know, as black and white as you can. And, you know, you've got a certain amount of mental capital that you can devote to trades. And you don't want to wear yourself out in these type of times and get, you know, on the wrong side, let it go against you, things like it's very easy to say these things. I'm aware of that. But based on wanting to devote the same amount of mental capital to each particular trade, you want to just, again, put the stops in, make sure that, you know, you are staying with your trading plan because you can make a lot of points in times like these, but you can also get killed. I've seen people get taken out in body bags when the volatility kicks in because they're used to doubling down, averaging in. I hate that dollar cost averaging. I hate that word. They ought to ban it from TV. It's, that killed people in 2008. So you want to try to, again, look at this as black and white as you can. Put the stops in. If you're wrong, you can always get back in the battle. And remember, the game is lose a little, make a lot. And if you're swinging huge on times like these, remember to not devote. Trade a little lighter if you're going to take the swings, and if you're going to try to leverage and step on the gas pedal, make sure the stops in are a little bit tighter, because you got to keep things in balance all the time. If your goal is to make a certain amount of points on a weekly basis, you got to kind of still or maximally lose a certain amount of points on a weekly basis. You got to turn the machine off when that happens, and you got to stick with your game plan. And if you don't have a game plan, you need to invent one, because this is a serious situation that could be developing, and we could see volatility for a while here. Now, we could have some big updates. We had huge updates in 2008. So, we're going to have some spike rallies here, and we may have some reversals. But, the market does what it's going to do, and the price is what it is right now. It's not too cheap. It's not too expensive. It is what it is. So make sure that you just kind of step back in times like this and assess, what you're really doing in front of this machine. And, hey, you want to take your ball home every day and come back the next day and be able to play. So keep that in mind. Take that from somebody who's made some mistakes at times. All right, let's take a look at the dollar one more time. This is something, again, I'm following pretty closely. I feel like this is, it's obviously a combination of quite a few, amalgamation of quite a few currencies in general. Targets on the dollar, again, 86.15. I'm expecting those to be hit. But if you're going to trade this balanced area and let it, pick up inertia, if you will, stop's got to be below 85.40. Guys, you've been great. Hope you've enjoyed the show today. Have a good day trading, and we will pick things back up mañana. See ya. Thanks.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.